Let us now look at Article 7, Paragraph 3 of the India-USA Treaty. Expenses allowed as a deduction, cross charges, etc. Now, we discussed that the profits of the PE are to be calculated on a net basis, right? So, how do you compute the income? It is the one which is attributable to the activity of the PE or by virtue of force of attraction clause. But how do you compute what are the expenses which should be allowed, right? Because unlike a normal enterprise, in case of a PE, bear in mind that a large part of the expenses might be something which is charged by the head office, right? Because they might be incurring those expenses exclusively for the PE, or there could be that they are incurring some common expenses for various countries, some of which might have been allocated to the PE. So which are the expenses which will be allowed is something which we are going to look at now. In determination of profits of a PE, there shall be compulsorily allowed as a deduction expenses which are incurred for the purposes of the business of the PE. So if there is any expense which is incurred for the purpose of the business of the PE, whether it is directly relatable, right, or indirectly relatable. Of course, for indirect one, we will have a lot of discussion. Should be allowed as long as it is incurred for the purpose of the business of the PE, including a reasonable allocation of the executive and general administrative expenses. So there might be some reasonable allocation of even the general expenses which might have been incurred by the head office, the research and development expenses, interest, right? Interest which is in relation to the business of the PE. So let's say if this foreign company is here, the PE is here. If the foreign company borrows some fund, out of which some funds are given to the PE, they can do an allocation of the interest payment as well. If they at their own level incur certain executive and general administrative expenses, those expenses can be allocated as well. And other expenses incurred for the enterprise as a whole. So what this paragraph says is that if any of these expenses, research and development, administrative, interest, or other expenses, which are incurred for the entire enterprise, you can do a reasonable allocation of such expenses to the PE, right? Or part thereof, which includes PE, right? Whether incurred in the state in which the PE is situated. So let's say if this PE is situated in India, whether they are incurred in India or elsewhere. It could be incurred in the state of the foreign company, or it could be even incurred somewhere else, as long as they are either directly relatable or they can be reasonably allocated in accordance with the provisions of and subject to the limitations of the taxation laws of that state. Now, the deduction which will be available to the PE in respect of these expenses will be subject to the limitations of Indian tax laws if this PE is in India. When you say the deduction is limited according to the tax laws, what it means is that if in India certain expenses are allowed only when the deduction for tax has been done, they will be allowed as a deduction only when those deductions are made. Right? If certain expenses are allowed on a payment basis, something like 43B that you have, then the deduction will be allowed only when these expenses are paid. So some of the key characteristics of Article 7, Paragraph 3. What is allowed as a deduction? Expenses incurred for the business of the PE. That phrase is very important. And a reasonable allocation of specified expenses. Which expenses can be reasonably allocated? Executive and general administrative expenses, R&D expenses, interest, Are common expenses incurred for the whole enterprise included? Yes. Where should the expenses be incurred? It could be even in the state where the PE is situated or elsewhere. And are the domestic laws restrictions applicable? The answer to that is yes. If there are any limitations under the local laws as to the deduction of such payment, those limitations will be applicable. Now, the second part of Article 7, Paragraph 3, what it says is that when a head office cross charges certain expenses from the PE, right, which are discussed here, they will not be allowed as a deduction. Similarly, if the PE charges and receives some money from the head office towards certain defined expenses or incomes, actually, even the PE will not be taxed on such cross charges. However, no such deduction shall be allowed. So the first paragraph is in respect of expenses. The second one, which is here, is for income. No such deduction shall be allowed in respect of amounts, if any, paid. Even if there is an accrual, in any case that doesn't matter. Otherwise than towards reimbursement of actual expenses. So if the head office has paid someone on behalf of the PE, then in that case, if the PE reimburses the actual amount, that is something which is allowable. But otherwise, if the PE pays any amount by the PE to the head office of the enterprise or any of its other offices, right? So what is referred here is any of its other offices. What this means is, suppose there's a foreign company, there's a PE, right? If this PE makes a payment to the foreign company or other office of this foreign company, mark the word other office. It is not saying to any other related enterprise, which means that if the foreign company has some other PE and a payment is made by this PE to that, even that will not be allowed as a deduction. By way of royalty, fees or other similar payments in return for the use of patent, know-how or other rights, or by way of commission or other charges for specific services performed or for management, or except in the case of a banking enterprise, by way of interest on money lent to PE. Right? Now, this is a very, very specific provision which restricts the allowance of a large number of expenditure in the hands of the PE. If any of these payments are made by the PE to the head office, no deduction shall be allowed to the PE for tax purposes. The reason in most of these cases is that certain activities, if I may call it, are to be done by the head office because it is kind of a shareholder activity. Or for assets which in any case they own, they don't need to make a payment to third party. These kind of cross charges typically reduce the tax base in the source state. And the idea behind this restriction is that there should not be a base erosion for the source state. Right? But if expenses are not to be allowed, so are the incomes to be excluded. Likewise, no account shall be taken in determination of profits of the PE for the amount charged by the PE to the head office of the enterprise or any of its other offices by way of royalty, fees, and everything here is the same. So no deduction allowed for specific expenses, no deduction allowed for any of these expenses, and no income to be considered for same type of receipts. However, if there's a reimbursement of actual expenses, that is something which will be allowed as a deduction. If there's a reimbursement which PE gets from the head office, that will be considered as a part of the receipts.